It's Brian Shannon from alphatrends.net. Today is Monday. It's the 9th of January 2017, and the S&P 500 finished with a little loss here today. Let's back up where we have kind of come from. The range in December, we saw that the market hit almost precisely on the 61.8% retracement before buyers regained control on the first trading day of the new year. And what I've got in there is a volume-weighted average price from the beginning of the year, and you can see that currently it lines up right at about 226 or so. We're also above that rising 5-day moving average, and after finding a little bit of resistance here at this 226.50-ish level, we did break through it on Friday, but we're back to testing it once again today. So if we back it up to a daily time frame and erase all that off, what we see here is that we still have a market in a primary uptrend. We had a little bit of a shakeout, and again, that hit at a 61.8% retracement. So I don't really view any near-term danger unless we're to get below and hold below 225.5 or so. If that's going to happen, then we would need to get a lot more defensive. We did see more decliners today, 1,746 declining stocks and 1,217 stocks advancing. The NASDAQ did come out to a new all-time high once again. So this market had that little shakeout, and then from that failed shake lower, we saw the break higher, and this market continues to show higher highs and higher lows. You can make a case that it's getting a little bit extended, but it's outperforming the S&P 500, and we wouldn't see any real damage to the intermediate term trend unless we were to get back down below the year-to-date volume-weighted average price in that 5-day moving average. So if we're to break down a little bit and let's say get below the volume-weighted average price from last Friday, and maybe breaking below this little low here could lead to a little bit further pullback. So just keep that in mind as it is getting a little bit extended here. The Russell 2000 is the area of primary concern. We do still have a rising 50-day moving average. So overall, I consider it as innocent until proven guilty. And we've been trading sideways in this range here for the better part of a month or so. And right now, when we drill down from this daily time frame to a 30-minute time frame, you can see that we're spending more time recently at the low end of this range, and to break down and hold below 134.5 might lead to more aggressive selling in the broader market as well. So just be aware of that, but it could also do what the semiconductors just did, which is to come down and test some support and then squeeze those shorts once again. So, the primary trends in all these markets are higher. So if you're going to be trading on the short side, you have to be pretty aggressive about it. The biotechs are continuing to rally a little bit here after breaking beyond that little range of resistance from late in the year. As far as buying it up in here, I think it's kind of foolish to chase it after a move from 265 to 285. Instead, I'd rather see that it could kind of pull back here, maybe even in the next couple of days down towards that 5-day moving average and VWAP from the beginning of the year, and then look for stabilization. Perhaps that would give a better low risk opportunity. Again, that's what we focus on each and every day at Alpha Trends. Right now, we have a sale on the subscription products if you sign up for an annual subscription. So for instance, the end of day video is typically, just the this video that you're seeing Monday, Sunday through Thursday. We see this video here is normally $249 a year. Now it's $199. The silver subscription, which is typically $599, is $499. And the gold, which has chat room and stock trade ideas every single day, to normally $799 is $599 for an annual. So you want to check that out if you've been waiting for a sale price from Alpha Trends. Alphatrends.net is where to go look for that. And the shares of Apple we spoke about last week because we were talking about them as a buy beyond this level right here. It came down, it shook people out at this point, but then got back above that 5-day moving average, made the higher high above the 5-day moving average. Now the stock has a couple dollars of upside in it, and it's up at new highs that it hadn't seen since 2015. So nice upward momentum in shares of Apple right now. I would say worst case stop for a swing trader would go below 117 or so. We also spoke about NVIDIA recently. I've warned about it being a little bit overextended right on this day as it closed at 117.30. It pulled back pretty deep, and now that we saw that today it got back above that 5-day moving average. This is the level we were looking at for Alpha Trend subscribers. And I think that now this stock is back on the upward slope. A stop would go underneath this 5-day moving average and year-to-date volume weighted average price. I also wanted to talk about these January effect stocks. And you have to remember again, the way that these work are it's meant to be an aggressive trading strategy only. It's not that I'm calling a bottom in any of these names. And I've said numerous times, I would expect that many stocks on this list of 10 that I got it down to might even go bankrupt this year. So the 10 stocks that I had mentioned on average were up 7%. And now let's take a look at where they are, because I'm losing a lot of interest in these stocks right now, especially when they're below declining 5-day moving average. So ANF, no reason to be involved in that. If you bought BETR, I would say your worst case stop now goes at 935. This is going to be my last update on the January FX stocks, by the way, unless subscribers have questions about them. Shares of Fitbit, it had a nice rally off the lows, but I would say if you're in it, your worst case stop probably about 765. Fuel cell never really did it much of anything. I had a little bit of shares and I'm out of this one. I have zero interest in it going forward. Same would go true for GNC. This one was one of the ones that actually never even was positive more than 1 or 2% since the beginning of the year. But it's clearly, in my mind, failed as it broke back down below that 5-day moving average. There's no reason to be involved in that one. HBI, if you're in this one, your worst case stop, I think, would go at about $22.10 a share. JASO, nothing going on in here. Worst case stop, I'd say 490 if you're in it. SHLD had a spectacular run, but it's been breaking down, breaking down, breaking down. There's no reason to be in this stock any longer. It made a 25% plus rally, and it's pulled back now. I think no reason to continue to watch it. WUBA, if you're in this one, worst case stop probably would be below here. I'd probably even tighten it up towards 29.40. And then finally, ZTO, I would say the worst case stop would go at about $12.75 a share.